Traders, welcome to Top Tier Outlook for the week of May 13. Great to see everybody here. We are going to take a look at what is going to most likely move the market this week. And if there's market movement, there's market opportunity, and that is what we are looking for. So, first off, what is going to happen this week? What is it that we are looking at in terms of movement? And the easiest way to do this is head over to an economic calendar. So let's start off with that. There's usually 2 or 3 calendars that I'll take a look at each and every week. And the first one is going to be Forex Factory. Why do I like this one? Why is this one that I would recommend? When you take a look at Forex Factory, the cool thing about it is if you're uncertain about what economic event could move the equity markets, treasury markets, currency markets, metals, etc., they make it really easy. And there's this nice little icon that will be red, and that is where we get hot zones from, right? What are scheduled high impact economic events. So if you take a look at Monday, not every single event that's going to be market moving is necessarily going to have a red. So anytime we have FOMC, that is most definitely going to be a potential hot zone. And you're going to notice that throughout the week, there are plenty of FOMC speaking engagements. Probably none more important, however, than the red hot zone of Fed Chair Powell speaking on Tuesday, the 14th, as you can see here at 10 a.m. Eastern. So that's going to be the big one. Now, what's really weird about this, and let's presume that Powell knows what the core CPI is going to look like on Wednesday. You can see here we have core CPI coming in on Wednesday. Let's just presume that he knows what that number ultimately is going to be. And you'll see that this is happening the day after Powell. So whether that be CPI, Empire State, anything that we know is going to have a measuring stick of inflation. And obviously, the only inflation metric more important than the CPI is the PCE. So this one's going to be one we definitely want to watch. On Wednesday, again, a day after Powell speaks, we're going to get this number. And this is where, and if, by the way, if you're a subscriber to the Top Tier Outlook newsletter, you know exactly what we're looking for in terms of volatility. But be aware that if that number comes in higher, aka hotter, then we know that with that release comes the likelihood of higher yields and lower indices, because what that will suggest is that the Federal Reserve isn't quite where they need to be with inflation, and that rates need to stay higher for longer. The equity markets hate that. They absolutely hate that. And so we know that between Tuesday and Wednesday, that's likely going to set the tone for not just this week, but likely for the remainder of this month, unless we have some sort of mover and groover with PCE and non-farm. So keep that in mind. Taking a look at the rest of the week, we have plenty of FOMC members sprinkled throughout the week, but those are the 2 big market movers, macroeconomic market movers this week. And another calendar to check out would be Econo Day. That one's a really good one to look at. Sometimes FOMC members that aren't listed, actually, I can see Collins here, and I need to add that to the, well, no, actually, this will be tomorrow. Tomorrow, the Econo Day will update. So check out Forex Factory on a Sunday. Check out Forex Factory. And if you'd like, I'd check out Trading Economics as well. Sometimes there'll be events on Trading Economics that won't be listed on Forex Factory. Things like the Tuesday API for you crude oil traders, and a few other hot zones from Fed speakers that may not be listed. I don't know why they're not all listed in one place unless you go to the Federal Reserve website, but this is the best way to do it. Now, we're at the very tail end of earnings. We do have a number of earnings coming out this week that are going to put a number of sectors in play. Again, check out the Top Tier Outlook newsletter for the details on what our game plan is for that. All right. So as always, gang, if you have any questions, feel free to type them in. And I hope everyone's having a very pleasant, a very peaceful, do whatever makes your mom happy kind of day. Happy Mother's Day. We are going to kick everything off here with a question. Groot asks about Amazon. Sure. The 1 hour chart. All right. So that's the difference between long-term swing trades, things that I take on a daily, and shorter term swing trades, things I would take on an hourly. Right now, my eye is on the daily. For the most part, Amazon has been an outperformer within the XLY, and I don't want necessarily to have a longer term bearish outlook. However, right now, the only thing I really could do, so I don't have anything on the 1 hour, my friend. I would need to have either a yellow candle up in here or a red candle up in here to actually set up a short. Not that that's what you're asking. You're asking about a buy, right? So we can take the shorts right off the list. We're not even concerned about the shorts. So fantastic question on the buy. I can't buy on the 1 hour because of the red candles. That's part of the Top Tier Pro system. We color code the candles in such a way where if the candle is a certain color, moving into in this case, a gray zone, that's a no-go. That leaves us with the daily. And the daily is where I want to see that classic green meets the gray setup. And that would be a longer term swing. So no 1 hour on Amazon, but that daily is still looking really good. All right, next up, Mr. Stonks asks, does Friday sell off in GE? Does Friday sell off in GE look like an entry to the long side or a caution? Both. So caution in that I want to wait for GE to settle down. That might be going into Monday's session. I want to see either an inside candle or a minor low. So this is something a lot of traders don't know to wait for. I'm not looking for a chart pattern. Chart patterns are looking for sort of shapes in the way that price action is moving. I look at exclusively price patterns. You might say, Rog, that sounds like splitting hairs. Let me tell you what the difference is. Price pattern is a far more objective way of looking at price because you're looking at open, high, low, close and the patterns that open, high, low, close create. So there's less subjectivity because there's less, subjectivity to what open, high, low, and close actually are, as opposed to shapes that the candles might be creating. So again, price patterns versus chart patterns. In this case, if I'm looking for a price pattern, it will be a minor low or an inside day tomorrow, starting tomorrow in GE. I do like the buy. The main issue was, and I love that you're asking if it was a caution, it was a candle of unusual size, meaning that the size of that candle exceeded, for me, an allowance of price movement range where things are within a normal movement. In other words, what is the typical price movement of GE, and does this exceed that to a certain degree? And we're looking at a certain percentage, and it did. So it makes sense to kind of tap the brakes on that. I do want a long position in GE, and we will continue to watch that one. And it really is only the 1 hour that I'm interested in. So no, nothing I can do on the, it is the daily. It is the daily I am interested in. Nothing I can do on the 1 hour for the same reason that we listed for the Amazon trade, which is if the red candles are here in this gray zone, that is a big cup of nope. I've got to pass on that. But it doesn't mean that I can't trade GE. It simply means I've got to go take a look at, instead of a 1 hour trade, a short-term swing, I'm going to move it out to a nice trend follow, potentially on the daily. All right. So there is that. And by the way, if you're looking at what kind of trades we're setting up, if you want to know what kind of alerts we've sent out throughout May, where are we? Mostly longs. Right now the swings are working really well. So if you find yourself struggling to take advantage of the movement in May, which has been very good compared to April, if you are looking for that and you're struggling, come check out what we're doing in the Sector Secrets room. The swings are absolutely firing on all cylinders. All right, next up is Schwab on the 1 hour. Now, Schwab has been a pretty good stock within financials. Just the 1 hour is not a no, but let's go take a look. Now, so some of you might think, Rog, what are you looking at on the 1 hour as opposed to the daily to say yes to one and no to the other? It has everything to do with structure. It has everything to do with what's happening with momentum, and what's happening with trend. And I'm always most interested in trend. I mean, momentum really is the lesser important of the two, far less. However, I would never negate that if momentum persists long enough, the output of that persistent momentum is oftentimes, as you can see in the lower row of the multi-structure tool, the output is ultimately often a trend. So if the daily is back to trending, and I've got the green grab candles, I've got the trend, I've got the green grab candles, that's where the daily is going to be my best choice. And if price can sink down into that gray area, that's exactly what I'm going to do. Now, the problem is if I were to get down into the daily price movement range with yellow candles, that would be okay. But the problem is we'll probably be red by the time we get here. And that type of filter, right? It's not about indicators telling us where to get in. It's not about indicators giving us more, right? It's really about indicators giving us better. And if I can have a green candle in a gray zone, that's going to be better than even a yellow candle in the gray zone. And certainly it's just a big no with red. So that's going to take me right back to the daily on Schwab. So it's not as if Schwab is not necessarily something that I would be open to trading, just a matter of making sure I've got the right time horizon. And that is based on the time frame. All right. So that is what we're looking at there in terms of Schwab. So daily time frame there. And absolutely, Panthers, happy Mother's Day to all those moms out there. Absolutely. All right. Do I use weekly time frames for long-term positions? Long-term would be a little bit more along the lines of what we do in the portfolio sessions, meaning if I'm looking at a weekly time frame, am I looking at a short-term swing? Absolutely not. What the weekly is doing in terms of reflecting what we could see over the next few days is actually not that good. It's not that accurate in terms of the timing of the fill. So that's where I don't use weeklies. However, if my ambition is then to find a longer term, say 6-month hold or even years, right? Maybe years. We're in some position portfolio setups that we did in the alerted in the Sector Secrets Mastery. We did those, some dating back to 2022. And so that is where the weekly is going to be my focus. You know, how do I build, but how do I buy shares? I mean, those are share positions. How do I buy shares and take advantage of the movement? So not for trades per se, or not for short-term, days to weeks, right? But rather weeks to months, frankly, months to years. And that's the job of the weekly for me. EME, long-term. So again, define, so, again, long-term to someone who looks at a 5-minute chart all day, if that's the type of trader we are, would be an hour, right? So remember, again, small, medium, large, short, intermediate, long-term, those are descriptions that only we know. Like, for example, Panther, you know what long-term is to you. Long-term to me would be either that weekly position where I'm thinking months, or a daily where I'm thinking days to weeks, right? So again, that's fairly subjective. And I only say that because if there is a particular time frame you want me to look at, or a particular time horizon, let me know. That's going to dictate where we're looking for the structure. But regardless, we would definitely be looking to the long side on EME. All right, moving on. Carvana. All right, I don't actually look at Carvana all that much, but hey, let's take a peek, right? That's the cool thing about having the automation of the indicators, where I don't really need to know a lot about Carvana other than certain dates like earnings and dividend dates, if dividends even apply to the stock, and what the structure is of the different timeframes that I look at. So Carvana had obviously a really good earnings. Nothing here setting up for me at the moment. Do I want to be long? Yeah, for the most part, I would, because there's two things that Carvana is doing. Number one, it's really support levels that are on my radar here. Carvana is above the anchored VWAP for the year. So this is the anchored volume weighted average price. Being above that is sort of on the bullish sentiment or the bullish hemisphere of price action. And the other one is being above the 200 propulsion. Now, this is a combination of a short and long-term exponential moving average. And if you're looking at the top tier propulsion, which is exactly what I've got on this one, you're not only looking at the 8 and 200, but we're factoring in things like participation. We're factoring in whether or not there is participation, attention associated with that level. So if you're looking at the classic version of propulsion, great, super effective. If you're looking at the top tier, you've got an added benefit. But either way, we're above both. And I would focus mostly on the long side, but not much here for me to set up. There's not much that's really by way of a support level or a pullback. Yeah, I'd be careful. Good looking chart for potential buy. At the moment, I don't see a potential setup. Unless it's going to be a short-term one, and that might be, say, an oversold buy on the 1 hour. Okay, so no puts. I'm not looking at puts here. Unless it's going to be, so when would I look at puts? If I have a yellow or a red candle at a resistance level, there's a potential to get long puts. But if it's neutral and it's sitting down here at support, which it is, that's a Darvis support level right down here, there's no put for me to buy. And that just is a great time for me to remind everybody, there's a lot of ways to get in terms of timing. How do you get into a trade? What is the threshold? What is the level that gets you in? And because I'm an exhaustion trader, right? What that means is I would look for shorts at resistance. I would look for buys at support. That's the big difference. Now, a momentum trader is going to look for follow through above resistance, and a momentum trader is going to look for follow through below support. That is not what I do, but those are very popular ways to look at support and resistance. The most popular is going to be momentum. I'd say 80-90% of market participants, retail market participants, are momentum traders. They want to see something moving higher in order to get long. They want to see something moving lower in order to get short. I'm a little bit more a fan of, if we reach a certain level, depending on the context of the trend, the market structure on that time frame, would I expect this to hold, and would I expect that to hold? And if you notice, you were looking at exhaustion as opposed to momentum, most especially, this is the 1 hour chart, by the way. If you're looking at exhaustion versus momentum, at those predefined Darvis levels, this and this, you see how well it's working. So if you don't have an exhaustion strategy as part of your approach, if you don't have it, how do I buy support and how do I short sell or get puts into resistance as part of your approach? Please consider adding it, because that is a very common way that we have market behavior in terms of trade setups, the timing. All right. Next up is, let's see here. In terms of questions, is that about it? Oh, okay, perfect. So that wraps it up, gang. Thank you as always for the questions. Please keep in mind the game plan for the week. Powell, CPI, huge macroeconomic implications. Check out the Top Tier Outlook newsletter, where I take the week, drill it down into about 3 or 4 pages of what we need to be aware of, what sectors, what macroeconomic events, what hot zones, and where our focus is going to be for our next set of swing trades. As always, gang, be good to each other. I'll see you tomorrow for charts and coffee.